Can't seem to hear you.
We're good?
Yes,
Okay.
it's better.
Okay, great. Thank you. So I'll start again. Hi, I'm Clara Pang. I'm a corporate partner here at Linklaters and wanted to welcome our guests both here in the room and online. I heard there's many of them online, as well as our speakers and the Transition Plan Taskforce, a task force launched by the UK government to develop a gold standard for client transition plans. Our firm's head of ESG, Vanessa Hubbard-Williams, is a member of one of the task force working groups, and we are very happy to support the impactful work that the task force is doing, and especially the opportunity to get to hear about it here in New York. So with that, I will turn it over to Shane, our keynote speaker.
Thank you very much. Good afternoon, everyone, and a special thank you to Linklaters for hosting us here in your fabulous room. We have some people here, but as you're saying, I think we've got 160 people registered online in the new hybrid way of running events and these sort of meetings, so we can reach everyone around the world. I wanted to welcome everyone to this event to hear about the Transition Plan Taskforce, also known as the TPT, because we do love a new acronym whenever we can invent one as it, and how it's going about setting a gold standard for private sector transition plans. As the co-CEO of E3G, I'm delighted to introduce this event. E3G has a rich history of pushing for ambition on green finance and working with governments and businesses to make change happen. E3G proudly provides half of the Transition Plan Taskforce Secretariat alongside the UK Centre for Greening Finance and Investment at Oxford University. The Transition Plan Taskforce was announced at COP26 as part of the UK Chancellor's announcement that the UK would be the world's first net zero aligned financial centre. The task force itself was then launched in April of this year with a 2-year mandate to develop a gold standard for transition plans. Transition plans are intended to set out the credible steps that a company will take to deliver on their net zero commitments and to make a contribution to the whole of economy transition. Net zero and transition plans have become the new norms in private sector ambition. Thousands of companies have set net zero targets, yet that we know without standardized high quality plans, it's unclear how these targets will be met. In short, without good transition plans, those promises will remain just that, promises unfulfilled. Without clear plans, investors can't make properly informed decisions about how to allocate capital, and companies can't be held to account on how they will reach their targets. This is crucial to tackling issues around greenwashing associated with this. With that in mind, transition plans are fundamentally part of the financial architecture needed to meet net zero going forward. And we've seen significant demand from the private sector for this work. There is real support out there for the Transition Plan Taskforce and everything that it's doing. The Transition Plan Taskforce is co-chaired by the CEO of Aviva, and its steering group is made up of CEOs and senior representatives of the finance and real economy companies around the world and civil society organisations. And what really sets the Transition Plan Taskforce apart is that it will inform future regulation in the UK directly. The UK Financial Conduct Authority is closely involved in Transition Plan Taskforce work and will draw on the TPT as it updates disclosure requirements going forward. So this is a really exciting moment, and this event is well timed. As we get closer to COP27 and people reflect on global ambition at the UN General Assembly this week, there's going to be lots of talk about progress from COP26 and frustration that we have at the slow pace of action in many places. The Transition Plan Taskforce, I feel, stands against this. It is proof of fast implementation. It will soon publish its first major output in November, a consultation on a sector-neutral framework for transition plans with accompanying guidance. And we think this is going to make a really concrete step and will really help solidify the Transition Plan Taskforce as it goes forward. And today we'll hear from fantastic speakers from across the green finance world who are each a member of the Transition Plan Taskforce. They'll talk through some of the key issues. What does good transition plan look like? How does the TPT's efforts align with other global initiatives? And how does the TPT consider wider sustainability issues? This will be a very important and exciting discussion, and so I'm now delighted to hand over to my colleague Kate Levick, who's the Associate Director of E3G and the co-head of the Transition Plan Taskforce Secretariat, to chair the session. Thank you very much.
So thank you very much to Shane for a great introduction. And I'd like to reiterate again my thanks to Linklaters for their support of the Transition Plan Taskforce work and for hosting us today. Those online probably can't see, but we are in the most amazing room up on the 31st floor near to the Rockefeller Center. So audience in the room is going to have to be careful not to be totally distracted by the beautiful views. I'm very pleased to be welcoming a distinguished panel to talk about the task force's work, and I'll invite them up in just a second. But just to introduce who we have, so we have Chandra Gopinathan, who is the Senior Investment Manager and works in sustainable ownership at Railpen, institutional investors. We have Mardi McBrien, a director from the IFRS Foundation and working closely with the International Sustainability Standards Board. Nicolette Bartlett, the Chief Impact Officer from CDP, and Tony Rooke, who's the Executive Director for Real Economy Transition Planning and Sectoral Pathways in GFANZ, the Glasgow Finance Alliance for Net Zero. So all of these people are working very closely with the task force as task force members helping to develop this UK work. And today we're going to hear from them a little bit about that work. So if I could ask everybody to come up, thank you. Listeners in the room. So while our panelists are making up, I'll talk a little bit about the Transition Plan Task Force itself. So the Transition Plan Task Force was announced by the UK Treasury at COP26, and it has a mandate to set the gold standard for private sector transition plans in the UK. And that's in the context that at COP26, the UK made a commitment to become a net zero financial centre, and also announced that it would be compulsory for listed companies and for financial firms to publish climate transition plans in the UK from 2020. So since it's in April this year, the TPT has been consulting extensively with finance, real economy, civil society and academia to understand what a gold standard plan looks like. And the TPT is planning to publish its first major consultation at COP on the 8th of November. That will be a sector-neutral framework for private sector transition plans, together with guidance for preparers and users. So these will set out recommended disclosures and support organisations with an end-to-end process for preparing a plan. That will be a UK jurisdictional approach, of course, by definition, but the UK is very much looking at how international standards are developing and shaping up, and certainly would like to help to shape and inform those standards as they develop. So we're all good on that technical side now. Excellent. So I am going to start by speaking with Chandra, who's actually joining us on WebEx. So he's on a screen here. He's probably very big for those online. Chandra, could you please talk a little about your involvement in the Transition Plan Task Force, why Railpen's involved, what it is that you're seeking to get out of it, and tell us a little bit about what for you and for Railpen are the key elements of a transition plan.
Sure. Thank you so much for the involvement, the opportunity, and apologies I haven't been able to make it in person. For Railway's pension scheme, we manage about 37 billion in assets for railway employees in the UK here. So in terms of I just seem to have lost my screen. Can you still see me?
Yep.
Yeah, okay, good. So in terms of why we are involved in the Transition Plan Task Force is, I mean, one of the things we have been big supporters of climate disclosure within the sustainability teams at Railpen and with the trustees as well. And we think transition planning, both from a firm and a stakeholder perspective, and by stakeholders I mean the investors and users and preparers both, is key to determining how any business adapts to the low carbon transition. And I think TCFD has done a fantastic job in terms of setting the foundation for climate risk and opportunity disclosure. And the transition plan is essentially the next step to go in and set out these decisions that companies make on decarbonizing their businesses and set them out in a public and a comparable way. So, and set good interim targets and milestones and do it in a standardized way. So it's clearer for everybody, including investors, and there is more transparency, more accountability for investors around an action that a firm is planning to take. So our involvement and our interest in this is primarily also to sort of engage with preparers as well and make sure the investor perspective, the user perspective is reflected well, the use case is reflected well, and we understand the challenges and the sort of standardization requirements, etc., that are needed from preparers as well. So getting those perspectives married together is pretty much the reason we were involved, and hopefully we were able to contribute that and hope to continue to do that as well. And to the second part of your question, what do we need? What are the key elements of a transition plan for us? I mean, from a user perspective, it's you need the current emission snapshot of a company, the profile. You need a baseline. TCFD has done a pretty good job in terms of having companies disclose that. You need the ambition, commitment, and targets that are also part of most TCFD reports. There is a need for standardization, which we look for as well in terms of science-based target settings, in terms of the science behind these targets and which sector, what target does it make sense, having that sort of alignment, and then the material implications on the business model in particular. So looking at, for every sector, for every company, what is the policy, technology, and the market and the products and services risk is on the business model. So being able to assess that a little bit, and then disclosure around the implementation strategy and capital allocation, which we think is key. So how specifically are you going to decarbonize as a company? Do the actions make sense? Are there actions in place? And do these actions also, and what do they translate to in terms of investments? What are you going to, where are you going to put your money where your mouth is, and how is this sort of going to shape up going forward? And last but not least, understanding the levers and opportunities that any company has in terms of its adaptation. So what sort of opportunities can we look forward to? I mean, TCFD did a great job in terms of quantifying risk. We think the balance also in terms of getting opportunities going is also key. So these are some of the key things. And one thing that isn't covered by TCFD, which I think the transition plan we will be looking for as well, is looking at the offsetting area as well, because there are a number of companies which have started discussing offsets already. There needs to be standardization. There needs to be best practices out there, which is one thing that is also being recommended by the SSB and the Transition Planning Taskforce in terms of how that area is specifically dealt with and standardized. So in a nutshell, that's sort of what we look for from a transition plan, and that's pretty much sums up our involvement in the initiative as well.
Brilliant. Thank you very much, Chandra. And just to say, we'll let all the panel have a chance to introduce themselves. We will hopefully have a bit of time for people to ask questions. In the room, that's a case of putting up your hand. For people who are online, on the event page, there's an app called VBox, and it's possible to ask questions through that. So just to make online participants aware of that. So I'd like to come to Nikki next. Nikki, can you tell us about why CDP has decided to participate in the Transition Plan Taskforce, and also about the specific role you've taken on and some of the work you've been doing?
Thanks, Kate. Yeah, so CDP has been really sort of thrown ourselves into this because we believe that the transition plan is the next logical sort of step on a transition journey for a company. 20 years ago, companies started measuring and putting in the data streams internally to work out what is their governance on this, what are their environmental impacts, and more critically, in this particular case, about climate. And then you saw this extraordinary development with the TCFD coming on board, now the ISSB, the SEC. You've got this more forward-looking, not just measuring what's happening now, we're looking at what needs to happen in the future, what are the risks, the opportunities that this really critical issue is going to have for a company, which of course is critical and vital information for investors. And then the next step is you start to see a coalescing around setting really ambitious targets, really realigning a company's the way it works and its emission reductions target. And you see standards emerge in that space, science-based targets being a critical one there. And the kind of next step for us on that transition journey is definitely, okay, the plan. Now, how are you going to do this? How are you going to achieve this? And we've been asking a question around it in our disclosure since 2015 or 2016, and sort of noticing some of the things that were emerging in companies' planning. A lot of this is already embedded if you do your TCFD well, but it's really starting to frame it into a plan that's both what we believe is both a verb and a noun. This is something that continually happens within an organization. It's a completely restructuring of your business model towards achieving outcomes on climate. And CDP, we were delighted to be involved in this. We co-chair the working group 3, which is the boring one around the guidance. And my co-chair, Mark Manning from the FCA, let's be honest, has done the majority of the work for the entire thing. And the team at CDP have been amazing, with someone here in the room. Thank you, Emma. But writing that guidance, which would hopefully help companies, and Chandra has been extraordinary on that front as well, probably written one of the biggest annexes in history in the back there, is really to help companies understand how the users are going to be using the information, and how to prepare. What are the processes internally you need to go through? So if this is the neutral framework, sector neutral framework, what is it you need to do to design, develop, and then deliver your transition plan?
Cool, thank you. And you know, from a CDP perspective, I know CDP has its own definition of a transition plan. You know, what would you say is a transition plan, and how have you found that discussion developing within the context of the task force?
Yeah, I think it's been really interesting. I think the plan definitions are actually very similar across the board. We just say it in different ways. But ultimately, it's about steps, practical, being transparent about the steps that you are taking. And those need to be really clear steps. They're in your assets realigning. They may be in your CapEx and OpEx decisions. It's your governance. It's the accountability you have internally. Who's making, you may even need to restructure your organization to achieve this, more than likely you will. And it's actually about your business model changing. I think across the board, we've all agreed that those are the key elements of a climate transition plan. What's been really interesting is looking at how much, how this is built on what exists in the ISSB, the TCFD, the SEC, what makes it distinct from that, what's the step forward from that, and what is additional to it? Does this include resilience? Does this include nature impact? And I think we've had a really fruitful work on that within the TPT, and we can discuss that later. But those are all key elements of what we believe needs to be in a climate transition plan.
Great, thank you. I'm going to ask you more follow-up, sorry, partly because you said lots of things that I think people might want to pick up on. So one, just could you say a little bit more about how the TPT is approaching transition as a concept? Because we're looking not only at, if you like, paper decarbonisation or what can be called that, but also about a firm's contribution to the wider whole of economy transition.
Yeah, so this isn't about the perfect accounting exercise, right? And of course, it's very weird for me to say that from CDP, but it's ultimately about a complete shift in how your company operates, but also critically, how it plays a role in the economy transitioning. There really is no point, whether it's a finance sector institution, and Tony will really kind of unpack that from a GFANZ perspective, or whether it's a real economy company. There is no point if you've done everything you can within your operations, within the boundaries, even within your value chain, and the economy is not able to transition, because you still have the outcome of that risk in your space, and you're also not able to realize the opportunity. So I think a whole of economy approach has really been something that we've debated and taken on board within the task force, because it's not just about your own operations, it's not just about what you can achieve in your value chain, but it's absolutely also about how you influence the world around you to achieve that, whether that's across sectors or within your sector, and whether that's critically with governments, because ultimately the entire economy needs to transition. And in the finance sector, that's critically about providing transition finance. If you're not able to provide that transition finance, and you're just essentially decarbonizing, what they call paper decarbonisation, the economy still doesn't transition, or it doesn't transition in the order or at the pace you need. And both the risks and opportunities for you are both untenable and unrealizable.
Thank you. So one more quick follow-up. You mentioned the SEC, and I imagine we've got a few audience members who are interested in how this might relate to SEC work. But you also said how you're working closely with Mark Manning from the FCA. So could you spell out a little bit how we might see the task force's work influencing the regulation that the FCA will put in? Kind of roughly what we understand that process might look like. And then if you want to mention the SEC as well, even better.
Well, I think what's groundbreaking about this work, I mean, and the speed with which it's been achieved, really, and, you know, extraordinary kudos to E3G and Oxford for, I mean, working through the night to get us to this place that we are now. But is that this is is the first framework that says, okay, so what is a transition plan? Now, transition plans are anchored, and Mardi will talk about, in the ISSB framework, in the SEC, in the EU reporting standards, and in the TCFD, obviously. But this really kind of frames out in a transition plan, this is what investors need to see. This is the next step of what it looks like. And how it's being kind of embedded into the UK is that step one is that we are bringing this out for consultation. Companies are, let's say, volunteering to be part of a process. This year, companies are already needing to disclose by regulation against the TCFD in the United Kingdom. This then takes the next step for companies. So companies next year, we have a core group of companies who have put their hand up and said they will sandbox this. They will take this, implement it internally, test it, be part of the journey with us, such that what we're hoping to be able to achieve is enough groundwork in the space that the next step for the regulator is to be able to take that sector neutral framework and pretty much translate it into the next iteration of those reporting requirements. I think with the SEC and with the EU, I suppose what we're hoping is that some of this will influence that. I do believe that really, if you're doing your job well in any of that disclosure, much of the stuff should be coming out anyway.
Cool, thank you. So I am going to try and observe gender parity and move to Tony next. So Tony, tell us about GFANZ and GFANZ's involvement in the TPT, which obviously is in the context of a lot of transition plan work that GFANZ itself has done, some of which you lead. So what do you see as the areas of convergence, and how do you think the TPT work complements what GFANZ is doing?
Yeah, so GFANZ is really set up to help GFANZ members implement their net zero commitments. That's the fundamental premise of GFANZ. We're trying to help them. And that means that GFANZ members have to set their net zero transition plan. So we're framing everything very much net zero by 2050, 1.5 degree alive. So from that point of view, they need to actually understand what is their own transition plan involved. So we've been working on that. But similarly, they can't do that without actually understanding what the real economy is doing. And then a fundamental principle of what we're trying to do is actually use finance to transition the whole global economy, and using our members then to be able, we're not using our members, but to provide the information to our members so that they can help transform the whole economy. We've heard the term paper decarbonisation. Effectively, whether you're a company, a corporate, or a financial institution, that could mean divesting into something really that is already aligned, is already low carbon. But that doesn't necessarily decarbonise the whole economy. It creates a bubble of overinvestment in small number of firms. And actually, only some companies and financial institutions will be able to actually achieve that paper decarbonisation. So getting it right from the start to actually help the whole economy is so important. Now, where this feeds into the work that the Transition Plan Taskforce is the fact that we all need consistent data. That's the first part of it. And the work that CDP has done has shown that there's only about 30% of firms disclosing to CDP that have got a transition plan in place or are committing to do a transition plan. And only 1% of those have all of the elements. So there is a massive data hike that is needed there so that financial institutions can help those companies. And at the end of the day, this is what it's all about. We as financial institutions want to help finance those opportunities and make our world a better world as it decarbonizes, make it affordable and a just one at the same time. So we've been setting out our expectations of what the actions of financial institutions should do, and we're coming out at a similar time to the TPT in November on that. But we've also been saying what our expectations are from the data we get from the real economy. And importantly, when we say investors, investors are not heterogeneous. They all have very different outlook. In GFANZ, we're covering across multiple financial sectors: banking, insurance, asset management, asset ownership, financial services providers, amongst others. So they all potentially have different data needs. And what we're trying to do is prioritize that and say, these are the core ones that everybody needs. Ultimately, that should lead into hopefully the corporates only get one request for this. So they're not going, oh my God, there's 1,500 surveys, there's 1,500 disclosures to do. So that's a core aim as well, which I think fits very well with the TPT. Final point, sorry, I am rambling, but the final point is GFANZ looks globally like the ISSB and like CDP. We look globally, whereas the TPT is much more of a UK focused organisation. But UK companies don't operate just in the UK. They also operate globally. So the experience that we're bringing is the feedback we're getting from across the globe on what is consistently needed as well, and feeding that into it so that we don't get divergence. We converge on what is really important.
Brilliant. Thank you very much, Tony. That is probably the ideal lead into Mardi. So Mardi, tell us about your perspective from the ISSB, why you accepted the invitation to join in with the TPT, and how this relates to the work the ISSB is doing overall and how this might influence it potentially in the future.
Thanks, Kate. So at the ISSB, for those that don't know, International Sustainability Standards Board, and that was the consolidation of a number of global reporting initiatives with an investor focus earlier this year, and has gone out and put some standards out to the market, one on wider sustainability issues, so more like any sustainable issues, I guess, and then specific guidance, specific requirements on climate change. Our climate change requirements were built very much from the TCFD, very much from the work of CDP, CDSB, SASB, everyone that's come before, and we've popped them out to the market and got some feedback. But as part of our work, when going out to set global standards, you need to hear what's going on in the jurisdictions around the world. There was already activity going on. And as the ISSB was set up, we had the SEC that was doing things. We had Japan that was doing things. We had China that was doing things. We had Europe that was doing things. And we had the UK that was already going down the direction of setting up a transition pathway task force. And the important thing about our standards is we need to make sure they can be globally fit for purpose. They could be applied in any jurisdiction across the world. Our accounting standards are adopted in over 140 countries across the world, and would ideally like our accounting standards to be adopted in that many. Our climate and sustainability standards to be adopted in as many and as quickly as we possibly can. That will give us that consistent, comparable, most likely, we don't require it, but most likely audited data linked with financial information to the market in the quickest possible time. So, that's sort of our goal, is to get those 140 jurisdictions locked in, disclosing against our standards in the quickest possible time. But we're also not setting a low bar. We've gone out and said we're setting the global baseline. But it's not a global baseline. We all know TCFD is not a low baseline as a minimum to start from. And as part of that, we've also, as my colleague said, mentioned part of the transition pathway. So why we got involved, sorry, long way round, is Mark Manning came to us and said, we think it's really important that these standards can interface as part of the jurisdictional alignment with what we're doing. And so we said, okay, well, that seems important, but also this is the first initiative of its kind. And this could provide very good guidance for wider disclosure linked to our standards globally. But it's just part of that building block. So we've got accounting standards at the bottom, we've got sustainability standards, they're interoperable. We've got wider sustainability, so reporting on impact, sort of above that, the GRI world. And we want all of these to be able to connect together, and transition pathways and the work of this initiative sit on top of that. They all work through, and the information needs to move seamlessly. So we need to join all these things up, because this is also for us, it's about efficiency for companies, it's lowering the cost of capital, it's making reporting easier. We want companies to be telling one consistent story on all of their sustainability information, and to do that, we need to make sure we're joined up with all the other initiatives that do that are setting best practice and global, I guess, norms, if you like, in this space, to make sure that we continue to push out that high quality practice across the world. So that is why we got involved, and it wasn't just, I would say, because Mark Manning called us up and said, you have to do this. But then it had real good rationale underneath. And for many of you that have read the exposure drafts, you have seen, there was quite a big section in there on transition plans and what we should, asking the board asking for feedback on what we should do, what we should prescribe as part of our standards, and what we should leave to the market.
Cool, thanks very much, Mardi. So I'm happy to open the questions up now to people in the room and people online. I'm looking initially for any hands in the room, and I know, I do see a hand. So I think there's a mic coming your way.
Yeah. Thank you very much.
Is it on?
Yes. Yep.
Okay, great. Thank you very much. Sounds like you're doing an enormous amount of work very, very quickly. So a couple of questions. One, in your steps, in the process that you're talking about around transition, how do you treat corporate lobbying? How do you treat the work done by the government affairs folks at the companies, as well as actually the investors that have government affair offices? Second question I would have is on land use and nature. That has been, very under-invested in topic, but without nature and land use, obviously, we can't even come close to reaching net zero, and there's opportunity. So that's kind of the second question that I have. And perhaps the most maybe controversial question is, how do you kind of deal with the fact that there are certain policies that have to be in place to actually meet net zero in the real economy, and the pace of policy development is not nearly moving in the same direction. And investors will not move in advance of policies that would support their businesses. And so how do you deal with that kind of gap? And have you analyzed that gap through any policy scenarios, like, for example, the inevitable policy response that offers both the forecast and the required policy scenario? Thanks.
Okay, thank you. So 3 quite meaty questions there about lobbying, about nature, and about the broader policy context. I could see panelists referring. Do you let you have those 3 covered?
Shall I do? I'll chip in on policies as well, but then over to the others. So within the sector neutral framework, we have components that deal with how do you engage with policymakers? How do you do this? The important point is this is a disclosure framework. It's not an assessment framework. So there's no sort of norm within it. That's for others to do. That's the first thing. But also there is guidance within that can also shape what lobbying, what good practice on lobbying would be and what bad practice would be. On the policies, we also have a specific, and I know it hasn't come out yet, but there's a specific disclosure for sensitivity analysis, which tells you, well, how many of the assumptions, or how much is my transition plan based on these policy frameworks or this policy is being enacted. So there is a scope there for companies to say there is a sensitivity of this, or potentially if the carbon price is this, then we can achieve 70% of our transition, for example. So those are the 2 I would say.
Yeah, I think on nature, first of all, it was front and center in the discussions right from the start. We had some experts in the group. We created a working group for stuff, if I can put it that way, that we knew that needed to be added, developed still, and brought into the transition plan, but right now was not within the scope. And what's happened in that is for nature and social impact, so particularly for nature, we've had WWF and others really lean in and work and say, number one, why are the interdependencies between these things? And we can see it in our data, right? You've got like a quarter of European stock listed companies have a science-based targets for climate, 1% for water. There is a critical issue there, right? So the interdependencies, that was the first part of it. Secondly, okay, so if you were to bring nature in, how would you do it? So there's going to be a technical note that comes with the neutral framework that outlines some of that and makes those recommendations so that in future, as soon as possible in our ideal world, that can be brought into the space. And you know, I think there's been a lot of buy-in from the investors, from the think tanks, and from others. Make that as quick as possible. And you can see with the European reporting standards, they went there as immediately, right? So I don't think it will be long before that's in, but as I say, there will be a technical note, and it's been critical to it. I think on the policy side, I won't be surprised if very soon, we're in a very ambition loop space, right? At some point soon, you are likely to see some level of policy pivot in some of the spaces, because they can only, there's going to be this, well, there's going to be a greenwashing, right? You're going to greenwash because you've got these targets, you're not doing it. And then at some point there's going to be cool, but now the reason we can't do it is because the policy is not there. And we've seen that happen before. It happened to create some of the momentum for the Paris Agreement. It needs to happen now a lot more practically and in the regulatory space that is designed to make, we've got some targets. The NDCs of many countries are clear on net zero. What we need now is those specific pieces of regulation that drives a specific aspect of a sector forward. And I think as this disclosure comes through, you're going to start to see the specificity of that come out. And ultimately, both sides can call each other's bluff, if I can put it that way, pretty soon.
Great, thank you. I was wondering, Chandra, if you'd like to come in on those questions at all.
Yes, thank you. I just realized a raised hand isn't really the right way for an online forum, but thank you for looping in. Just to add to the points made on policy in particular, I think from an investor perspective and a user perspective, one of the things, as Tony highlighted, the guidance is very much towards standardizing preparer guidance. But the investor perspective is really something that needs a lot more standardization, and it will come. So what we've done is made an introduction into the alignment assessment bit, saying that is something that investors do need to start thinking about, and they are thinking about already. But that's the space that needs standardization, and it needs to be mapped to the sector neutral framework that is being proposed by the Transition Plan Taskforce. So as a starting point, what we've done is we've mapped out. The one thing I didn't mention during the introduction is we also represent IIGCC. We are members of the IIGCC, which is the Institutional Investors Group for Climate Change, who have a number of items of research, including a net zero alignment framework criteria for investors, which we've tried to map to the sector neutral framework as well, to give investors some guidance, saying, okay, this is what you need to be looking for in the transition plan in order to assess it. And within that, the engagement with policymakers, government, public sector, and civil society is a big part of the assessment as well. And that goes into the climate policy engagement assessment for investors. So how good is that disclosure around a company actually saying, engaging with policymakers, and how much of it seems credible, and what are they doing? Are they doing the right things? Are they pushing the right direction? So lobbying is part of that as well, and policymaker engagement, and actually discussions from the preparers as well as to what is needed on the policy front and what's missing is also being encouraged. So that way investors have a better idea. Investors and preparers are pretty much working in tandem, saying this is what's needed and let's help each other out. And as Nikki says, there will be a point where it becomes clear that the gap is so big in a particular area or a particular sector where policy needs to kick in and it needs to become mandatory. So that's what we're hoping to do. The user alignment assessment side is it's in a starting stage, and we hope to build that forward through sandboxing exercises, etc., over the coming months. So
brilliant, thanks, Chandra. There's a question that's come up online that you might also want to have a go at. Oh, you want to go?
I can.
Yes.
Just on the policy piece, there is this vortex, but if you think about it, yesterday morning I chaired a panel, 130 leaders from Securities Exchange commissioners all showed up to learn about sustainability, and they were the CEO equivalent, right? All learned up, and as the chair of IOSCO said to them, it's prudent to maybe ignore these things and let them develop more, but it's also prudent to be prepared. They're sending a representative from every one of those to deep dive training next week on ISSB, on these issues, right? To understand these issues. We've never seen engagement like that before at that level. If you've got 140 leaders of securities exchanges and equivalents around the world starting to think about this and upskill it, it's five-ish if we get it right, years away, right? So we are starting to see the right sort of policy momentum that makes things like transition plans just so critical. On our work around the nature, we're starting to see from our feedback that we got from the climate consultation in particular, that more work needs to be done around the nexus of climate and the other issues that feed into that. And I wouldn't be surprised, and now I'm not on that board, I don't deliberate, they're at the tables this week. I wouldn't be surprised if they came out and actually they may think about biodiversity and nature-related issues as nexus, but I wouldn't be surprised if they're not going, actually, do we need to do something on the just transition? Do we need to be providing more here? Do we need to be doing, their deliberations are all online, by the way. You can listen to them live, you can read all their papers, it's public standard setting. But I think this is going to be really interesting how this plays out, because we also got quite a bit of feedback about corporate lobbying as well as part of that, which I don't think fits under enterprise value disclosure linked to your accounts, unless obviously got in trouble for it. But I think these issues are coming further out, and the board will have some really interesting deliberations on them in the next couple of months.
Thanks, Mardi. I'm sorry to miss you out. Chandra, I did want to come back to you on one of the questions we were asked online, because I thought it might be a good one for you to comment on as someone who does this day to day. The question is, to what extent are we close or far from having a consensus about the specific data that investments and banks require from real economy companies?
Thanks, Kate. Yeah, really good question. To what extent are we close? I'd say we've come a long way, and we still have a long way to go. But I think some of the initiatives between IRGCC, GFANZ, and other investor initiatives in particular, including the Climate Financial Risk Forum from the regulators, the FCA in particular, is creating that consensus in terms of data. There is clear information around emissions targets. There is still the discussion around portfolio alignment or company alignment metrics, which is being discussed, but it's getting a bit more standardized in terms of what investors need. And there is obviously the bank universe as well, which is sort of being bank and lender universe, which is being included in the forum and trying to think about what more information is needed from a lender perspective. So I'd say we're definitely more than 50% there in terms of having a consensus. Emissions targets emissions metrics are becoming more standardized. Forward-looking metrics, there is starting to be a little bit of consensus. At the sectoral level, I think there's more work that needs to be done, particularly within the high emission sectors as well, going into things like fuel efficiency ratios for airlines, and going into hydrocarbon intensity for oil and gas companies and mining companies, etc. So all of those sorts of things, I think, need more data and standardization. So I'd say we're at the sector neutral level, we're broadly getting to a good place. In the sectoral level, there's a lot more work to be done.
Mm-hmm. Great, thank you. I know Tony wanted to come on this one too.
Yeah, I was just to say, because we've been working on this as GFANZ for the 40% of the financial services firms globally that make up financial services that have made net zero commitments. So we've been working on what are the real economy, what are the expectations of data from the real economy. Importantly, we've drawn from existing guidance and frameworks like CDP, like ISSB, like ACT, like SBTI and TPI as well. The frameworks that do the disclosure and do the assessments. That we're actually publishing that expectations on Thursday, but more importantly, I would say, is we've been feeding that work into the work that TPT does, so that we have that convergence, that we don't diverge and say, well, actually, this is what UK needs, but this is what global financial systems need, and this is what ISSB needs, and this is what CDP needs. It needs to be there to prevent that confusion in real economies. So I think the foundational data is probably there for consistent transition plans. What will happen over time is more sort of tweaking of that on specific data points. And from Chandra's point, I think at sector level we'll get more tweaking of that as we go. But there's enough information out there in guidance to really that what we need is more disclosure so that we've got the information. The other point I would like to make on that is there is areas that we need to develop better metrics and targets as well. And that's more sort of how we interpret that information. We've got very well developed GHG metrics to carbon emissions. But the translating those into financial metrics, business operating metrics, that's where we've got foundations, and we will build from that. And the lessons that we've learned from the last 20 years of working on disclosure is it evolves over time to meet the needs of the users of this data. So it won't be set in stone, but it is the foundation from which we start.
Brilliant, thanks, Tony. If no one else wants to chip in on this one, I have got a couple more questions that are coming through that are particularly Tony shaped. So I'm going to tell you what a couple of them are, and
Sure,
you can work out. That's absolutely not what I said. You can work out, if and how you'd like to answer those. So one that came in earlier was around the relationship between GFANZ and Race to Zero, because of course the new updated criteria for Race to Zero make it clear that companies that are part of the UN's Race to Zero, which of course includes all GFANZ members, are expected to publish transition plans. So the question was, will all GFANZ alliances have to adopt the new Race to Zero criteria? And the questioner was particularly interested in issues around financing, investing in coal activities and phasing out of carbon intensive sectors and activities, saying there's not yet been a lot of communication from the GFANZ, the individual alliances that underlie GFANZ about that alignment. So that was one question. There was another one which I thought was quite interesting, whether GFANZ had looked at whether there were any potential conflicts arising from a collective move towards transition, whether that could potentially be seen as almost like an antitrust issue or something to be looked at under competition law, and whether any circuit breaker might be necessary in the future if everybody tries to transition as once. So do let us know your thoughts on either of those.
Okay, the easy questions then. So a relationship with GFANZ with Race to Zero. GFANZ was formed under the Race to Zero guidelines as an umbrella organisation to pull together and amplify what individual financial services alliances are saying, and say this is the cross financial sector view. With the new Race to Zero conditions and the revised ones that have come out this week, yes, that's a fundamental part of Race to Zero. There is still some work being done to interpret that for members at the moment. So I would say that's a work in progress at the moment. I can't give you any more update on that because it is a work in progress. But this is an ongoing dialogue at the moment as well. But I would say one of the foundations is committing to actually put a net zero transition plan in place and disclosing that. We are very acutely aware of the conflicts with antitrust issues. We spend a lot of time thinking about that. In fact, that we also have Linklaters helping and advising us on those as well at GFANZ. So thank you very much to Linklaters for giving us excellent advice. So what we've tried to formulate is not antitrust. Yeah, it should pass. Well, it will pass. The issues come where, as a voluntary initiative, we say must and need, and we don't use that language. We're providing guidance, but it's for the individual GFANZ member to interpret that and produce their own net zero plan. So it's not a mandate, and we're not trying to convene the financial institutions to actually say collaboratively, this is what we will do together in this market. That's not what we're about. What we're about is, we've all made a net zero commitment. Here's some guidance on what that might entail, and now you need to interpret that as your own individual financial institution.
Great, thank you very much. And sorry to be putting you on the spot, but
Okay.
Very helpful to have those answers. I've got a slightly broader one now, which I'm opening up to the whole panel, but I thought I might start off with Nikki. There's a lot of skepticism of whether companies will actually implement their net zero targets. So how will companies be held to account for their plans?
Yeah, great question. I think, and even building on some of the questions before, There's a big difference, first of all, between standards and standardization. And that's why this ISSB, the SEC, and all of that regulatory development is so critical, right? So we've got standards in the space. So it's absolutely about, folks have been doing this for a while, but even in GHG emissions measurement, there are discrepancies, right? Because what you have is standards, and they flourish, and they're really good, and they update themselves. But the minute you put it into, you need things that drive norms. In other words, it's standardized the way we do it, right? Everyone does it the same way, therefore you can compare things. And I think with this regulation coming in, that's really going to be a game changer, right? So that's kind of the first thing I would say to that. I think the more transparency we have on this, that's why this framework is so important, because it really starts to look at specifically what are the actual things that you're doing to change your business. Once those become, and in our experience, you start to bring out that transparency. That's already the first step to being held to account. Remember, there's a big difference between something that's credible and something that's an accountability mechanism. Accountability mechanisms are those investors over shareholders of the companies, right? Regulators of companies, etc. It's not up to the world of NGOs to do that, but the world of NGOs helps to provide some of the credibility around this. This is what good looks like. This is what good standard is. And I think the more we have this standardized drive, that's why this task force is so critical, and the sector neutral framework is so critical, because you start to see some tangible stuff being disclosed, right? This is how the actual steps, this is the things we are doing, this is the things we're not doing. It will start to show the discrepancies. Then you'll have the analyzers come forward and look at it. And as the standards come in, it's going to get more standardized, more clearer, and you can compare things. And that's going to cause the conversation we can have with companies to be much more real and much clearer. And then ultimately, you're going to have tracking done. You're going to have regulators stepping in. But the first step is always going to be the transparency, the disclosure of it, the practical things, and then that becoming standardized, and then that becoming scrutinized. And companies will be held to account by the relevant stakeholders that they have on that front.
Great, thanks. Mardi, did you want to come in?
And just on the relevant stakeholders point there, we are seeing, and it's really in the last couple of months, but the rise of the audit, the sustainability audit in terms of standards and approaches that are coming through there. There's a real push for them to go catch up to us and go as fast. And that's what really needed. We need the audit world to understand that when it says net zero in the front, that doesn't come for free. I need to see something in the back that talks about what this is going to cost, or even a note that signals to the future. We're not, when we're starting to see that, then we know we've really got this right. So the audit profession have a really strong role at that end, and thank goodness they're trying to pick up speed to try and keep pace, so that we will help to prevent greenwashing in the long run through the reports.
Great, thanks. Chandra, did you want to add anything?
Yes, from an investor perspective, I think adding to all the fantastic stuff Nikki was saying about the work that's been done by the collaboratives, by the NGOs, by the task forces. For us, it's expressing that in two ways as investors. One is in our net zero climate engagements and stewardship. So all of the discussions we're having with companies will be based on the depth and credibility of the transition plan, saying, okay, where are the gaps? Why are there gaps? Why isn't it moving in a direction that it should? The second thing is around voting policy. So we've already started incorporating transition plan and credibility of transition plans into our 2023 voting policy. So all of our discussions and votes going into next year will include an assessment of the climate transition plan. I mean, there is the more standardization needed on the alignment assessment frameworks, et cetera, but that doesn't need to stop us from identifying when you see a glaring gap and you know that it's not best practice, and sort of starting to have those discussions and starting to express them in voting is something that's on the agenda for us for 2023. So.
Brilliant, thanks, Chandra. So we have a hand in the room over here. If we can get a mic over, please, Frank.
Thank you. Tim Stumhofer, Wells Fargo. Wonderful conversation, really rich. It's very clear that there's a lot of work being done behind the scenes from the task force. Great to see that. Look forward to the publications later this year. I want to pick up on a question that you all touched on earlier about looking across jurisdictions. Obviously, we're sitting in New York here. The SEC in its draft climate rule has said, in effect, if you have a transition plan, you must disclose it, an SEC disclosure. And I would just love to hear if there's been any thought within the task force about what that may mean in terms of this global harmonization, because obviously there are very particular norms and expectations about what is fit for purpose for an SEC disclosure. There's also a different standard of liability that could put particular guardrails on transition plans for SEC registrants. And I understand that that may be in conflict with the expectation of certain stakeholders about the level of detail in a transition plan, whether that's an NGO or whether that's a different government. So would be great to hear a little bit more how you're thinking about this cross-jurisdictionally. Thank you.
Okay, great. We don't have a lot of time, and I think everyone's going to have probably something to say on this. So we might try and do a quick fire around the panel, but Nikki, I can hear you're keen, so let's start with you.
I think two things. One is in the task force itself, we are mapping against all the other standards out there. So right now, we won't have the SEC mapping in detail, but we will in the future when the rule comes out, same full. We've got the ISSB in there now, we've got the TCFD, and then for the EU standards. So the first thing is, I think, is creating the mapping. I completely agree that there's a distinction to be made, and the guardrail issue is a key one. But this is not the only place companies should be disclosing, right? The SEC disclosure will not be the only place. They will be facing other jurisdictions. And I think our experience is companies will disclose broader data in different places. And it all depends on how those guardrails are applied. So I think we will see convergence quicker than we potentially, that's just my optimistic view, quicker than we assume. But I love the teeth that the SEC could potentially have. I think it's going to actually be a huge boost for the whole global space on this because of its teeth, frankly, as a regulatory body.
Mardi, do you want to go next? Particularly interested in anything you might have to say on the liability point?
On the liability point, no, I'm going to just leave it. I can't add more than what Nikki's already done.
Fair enough. So, Tony, GFANZ is working with geographies. What's your perspective on this?
Yeah, my perspective on this, I can't answer the liability point right here right now. So that's a level of detail that we probably need to work through. But again, by working with these standards bodies, making sure that we're aligned, we're hoping to sort of make sure that there is that convergence internationally. Our expectations that we put out the financial institutions that have made net zero commitments are there to be used by regulators, but we've drawn very heavily on the work of others as well, so that we're not going out there and doing something completely different. I think this is probably the most cooperative sort of set of standards that I've seen in a long time. Actually, everybody is trying to work together, engage with each other, and say, this is what we're doing, this is what we're doing. Yeah, actually, there's a lot of convergence there. So at the moment, I'm seeing that being a collaborative or cooperative world rather than SEC saying one thing, EFRAG saying another thing, ISSB is the same thing. And ultimately, we want to have an international standard. That's why I think ISSB work is so important.
And we didn't get pushback from the US on our transition plan. We got pushback mainly from developing and emerging economies to say this is actually a bit hard, too fast. Can we do this more proportionate, etc. We didn't get pushback largely from the US as a broad stakeholder of representatives.
Well, thanks, Mardi. And Chandra.
Yes, just quickly to add to what Nikki said, I think disclosures to us is not, obviously not the end game. They're the starting point. And I just leave by saying that, it is to understand the intent behind what companies are looking to do in the low carbon transition and the follow through actions associated with those as well. So while the language might be different in terms of liability, in terms of, absolutely an SEC mapping will come when the guidance is out as well. But I think understanding the intent and pushing through the follow-up action, and that's really the focus, and that can be done across jurisdictions, even through engagement and through standardization as it comes through. So it is a bit bumpy as a road, but I think that's something we've dealt with and will continue to deal with going forward. So Thanks.
I just remembered one thing also on the liability. That's why it's so important to have a sensitivity analysis.
Yeah.
So that what you disclose isn't necessarily a prediction of the future. That's what we're working to, but we need these other things as well.
Great. Well, thank you. I must say that's an hour that's gone very, very fast. So I'd like to thank everybody that has come in to have this discussion today. I feel like this has been a brief showcase for the UK Transition Plan Task Force work, but it's been a great opportunity for us to bring this to New York and also to communicate to a range of people who have dialed into this online. So thank you very much to all of our panelists. We could have, as ever, had this conversation for a lot longer. I'd like to thank all of you very much. And thanks to everyone who's participated. If you'd like to find out more information about this work, it's all available online. There's a website, transitiontaskforce.net. That will tell you around the members of the task force. It will show you the work that's been done already, including the call for evidence that went out in May around early thinking. And please watch this space for the new work that will be announced at COP27, in November, where we will put out the draft consultation of the section neutral framework, the guidance, and also into next year, where the task force intends to start looking at specific guidance for individual sectors. Also, please watch out for what GFANZ will be announcing on Thursday, which will be highly relevant. But yes, thank you very much to all of our panelists and to our hosts and for everyone who attended today.
Thanks very much.